How does buying power affect my margin requirements? Have you ever wondered how your buying power impacts your margin requirements when trading stocks and options? Understanding this relationship is key to managing your risk effectively. Let's break it down. Buying power is the amount of money you can use to buy securities. It is influenced by your cash balance and any margin you are using. In a margin account, your buying power is often double your cash balance due to Regulation T, which requires a minimum margin of 50%. So, if you have $10,000 in cash, your buying power could be $20,000. Now, let's talk about margin accounts. These accounts allow you to borrow money from your brokerage to buy more securities than you could with just your cash. While this increases your buying power, it also raises your risk. If the value of your securities drops, you may face a margin call. A margin call happens when your account balance falls below the required margin level. In this case, you must either deposit more money or sell some of your securities to meet the margin requirement. With increased buying power, you can take larger positions, which means more exposure to market changes. If the market turns against you, the risk of a margin call becomes higher. It's essential to keep this in mind when adjusting your trading strategy. When market conditions shift, you may want to adjust your positions to maintain a healthy margin level. This could mean closing losing trades or reducing the size of your positions. Diversifying your investments across different asset classes can also help manage risk and lower the chances of a margin call. Regularly monitoring your margin levels is another smart practice. By keeping an eye on your account, you can avoid being overextended. This proactive approach helps prevent unexpected margin calls and allows you to make informed decisions about your trades. In summary, understanding how buying power affects your margin requirements is vital for effective risk management in options trading. By being aware of your buying power and adjusting your positions based on market changes, you can navigate the trading landscape more confidently and minimize the risk of margin calls.